Hi, my name is Angus Ho with Daddy Debt, a part of the Ash Management Group. I want to show how you can budget as a full-time engineer, make real estate investments, and live an exceptional family life as a dad. So come along with me in this journey of wealth. I talk about the Ash method a lot, and the H part of it is house. Even when you get there, are you ready for what comes after when you're purchasing a house? So, I want you to start now, even if you're 18, trying to build up that house, or mid-career, trying to buy your first house. By setting yourself up now, you can reach that dream house that you've been wanting. Travel the world, whichever way you want. Financial independence, retire early, and do whatever you want to pursue. It's all about building the foundation now so that you can build the dream on top of. What does this foundation look like? Let's take a look at what the banks are looking for when you're asking them for money. One of the things is a good credit score. You can check out your credit score on Credit Karma. It's free and easy to use. A good credit score has many benefits because it tells the banks how likely you will default on a payment. So with a credit score of 750 or better, you can get a rate of 3.625%. If you have a credit score of 625, however, your rate would be 4.125%. It's so important to know where you stand now using Credit Karma so that you can build up that credit score now so that you save money. Other things that a good credit score can give you is that the banks will allow a higher debt to income ratio. You may also be eligible for certain programs and discounts. Banks can also overlook some red flags with a better credit score, like income, down payment, and cash reserves. You will need 2 years of tax returns. Some banks will be satisfied with 1 year, but traditionally they require 2 years. 2 years give lenders information about your various types and sources of income and tell them how much is eligible toward your mortgage application. Non-recurring income such as bonuses, lottery winnings, and late fees from your rentals wouldn't typically be counted as loan eligible income. The next thing the lenders look at is your bank statements. They use it to verify your income and they use it to verify where your down payment comes from. The banks also want to get 3 months history on your down payment to make sure it comes from a non-fraudulent source. So, how much down payment will you need, you ask? In Canada, the minimum is 5%, but the typical down payment is 20%. With 20% down, you don't need to pay Canadian Mortgage and Housing Corporation insurance, or in the United States, it's the PMI, Private Mortgage Insurance. Depending on your down payment, your premium will be higher. For example, you will need to pay 4% of the loan for insurance if you had a 5% down payment. If you had a 20% down payment, then you would not have any insurance premiums. Banks sometimes will give you a better rate if you have 20% down as well. One of the things that I forget sometimes is that I take the banks for granted. Like they owe me something for choosing them for the mortgage. However, them lending me the other part of the down payment seems more like I received a privilege. So, why do I say this? Make sure if you're going to commit to the house because you received a huge privilege. Also, show your commitment to this channel by helping me fight those dislike trolls by smashing that like button repeatedly. Repeatedly! Smash it! Are you still smashing it? Good. So, how do you save for a down payment, you might ask? The Ash method is a huge part of it. Accumulating and saving. I can guarantee you anybody can do it. Like I am just an everyday dad working hard as a full-time engineer, budgeting my finances, keeping track of expenses, cut back wherever I can, and staying out of debt. Working hard means that you may need a side hustle, make sacrifices, and earn more money to buy your first home. If you can do that, you can become someone like me who runs a side company, and manages over $3 million in properties. Before that, though, you must make saving a priority. Make that dream goal of yours your motivation to save. Track your expenses on Mint and some of the other tools I use in my video budgeting tools. You can also use something like a pre-authorized deposit so that every month you set aside some money so that you will never spend it. The last thing I would recommend trying is put your money in a better savings account. Put it in a guaranteed investment certificate or cash deposit, where it will earn a higher interest rate. By thinking smarter and using the tools that you have available to you, you can invest strategically like me, using the ASH method to buy real estate and stocks so that you too can travel the world and live in the 2,000 square feet house and be 80% plus the way there to becoming a millionaire. I hope this provides you some insight on how to save up for a house. If you have any more questions, join me at the Daddy Debt Facebook group to talk about your finance questions. Ask the YouTube community with your questions by commenting down below. If you like to hear more budgeting, engineering, or real estate tips, please leave a comment for what you want to hear. Smash that like button, subscribe button, and be sure to hit that notification bell so you'll be the first to know when I post new videos every week on Sundays. From the ASH Management Group, this is Daddy Debt, saving you money.